in terms of protecting people against that. That's just plain bad luck. But the other one is from people who run up credit card debt, and they're facing bankruptcy, or they've been through bankruptcy once before, and they owe a whole bunch of money, and they can't even pay the interest, let alone pay any principal. And half of my letters come from people like that, and that problem is avoidable.
You know, I've observed that a lot of people fail for two main reasons: liquor and leverage. Let me explain what I mean by that. Leverage refers to borrowed money, and believe it or not, you don't actually need it that much in this world. If you're clever and make wise choices, you can make a ton of money without having to borrow. Here's the thing: banks play a significant role in this whole scenario. They make a fortune by enticing you to spend money that we don't even have on things that we truly don't need. And what's worse, these things don't even bring in any income. When you rush to the bank, seeking money to fund your desires, you end up spending the rest of your life paying off those things that make you appear rich. And in reality, they keep you broke. Now don't get me wrong, banks do serve a purpose. They provide us with the convenience of having savings and checking accounts, which is pretty handy. And let's not forget, when you're making big purchases like a house or a car, they can come to the rescue with loans and financing options. But here's the thing they don't want you to know. When it comes to actually building wealth, there are some juicy secrets that the banks keep totally hidden. These secrets can actually help you make more money. But guess what? They don't benefit the banks themselves. Sneaky, right? In this video, I'm going to spill the beans on those hidden secrets. And trust me, they can be a game changer for your financial journey. How banks make their money. To profit from banks, you must understand how they make their money. The most popular way we know is through processing fees. Every time you swipe that card at places like Costco or Home Depot, your bank takes a little cut from the transaction. The interesting part is that whether you pay it with a debit card or credit card, the final cost to you remains the same. Sneaky, right? Now here's a little side note. Using a credit card can actually come with some perks, like cash back or rewards. Some of us are also aware of how the banks profit off us through our deposit. If we deposit $250 into our account, the bank takes that money and immediately lends it out to someone else. So, our money never truly stays in the bank. Now here's the kicker. They charge that person interest of about 3 to 5% or even 20% on credit card transactions, while paying you next to nothing in your savings account. So basically, the more money you deposit, the more money the bank can lend out and profit from. And what do you get in return? Well, let's just say you're left with mere peanuts. Now, let me tell you what happens when you start spending money that you don't actually have. Brace yourself, because this is where the bank really starts raking in the big bucks. Let's say you're at Costco, all set to make that purchase worth $215. But uh-oh, your account balance is insufficient. So what do? You end up using the bank's money to cover the cost. Sneaky, right? But here's where things get interesting. The bank sees this as a golden opportunity to charge you an insane interest rate on that borrowed amount. Before you know it, you find yourself drowning in debt, struggling to make those interest payments to the bank. And guess who's reaping all of the benefits from this unfortunate situation? You guessed it, the bank. They're making money off your interest payments while keeping you stuck in a never-ending cycle of debt, preventing you from building your own wealth. Even if you manage to avoid falling into debt and use your debit card wisely without exceeding your account balance, there's still a catch. Your bank might hit you with an overdraft fee for spending money that you don't actually have. So in the end, you're still paying for the privilege of using that money that isn't even yours. It's like a double whammy. It's truly mind-boggling when you think about how much the banks profit from people's lack of understanding about money. They've made billions of dollars just from overdraft fees alone. But here's the good news. We're not going to let them get away with it. We're going to turn the tables on them. We are going to arm ourselves with knowledge, take control of our finances, and put an end to this financial exploitation. Are you with me? Debit card or credit card?
It's a matter of convenience for some people, but I would have trouble If I were paying 12% for money or whatever it might be,
To take control of our finances, we must understand the concept behind the two major cards that banks issue to us customers and the difference between these cards. Now, you might be wondering if there's any difference in fees from using a debit card or a credit card. Well, there isn't really a big impact on your end. Whether you're paying with a debit card, credit card, or even cash, the total cost of your purchase remains the same. As long as you are using a credit card responsibly and avoid buying things you wouldn't normally purchase with cash, it won't affect your expenses. So, it's important to be cautious when it comes to spending money that you don't actually have. When using a credit card and you purchase an item that costs more than what's in your bank account, you can get charged up to a 20% interest rate. The only exception where your bank doesn't earn money when you spend your own money is when you use cash. However, keep in mind that you might still have to pay an ATM fee to access your own cash, so it's not entirely fee-free. But generally speaking, it's more convenient to use a debit or credit card instead of cash. The fee your bank receives for processing transactions is something that the businesses pay, not you. How to take control of your money.
Many years earlier, and they made a very decent deal for us, and I like Brian Moynihan enormously.
So, it's important to be cautious when it comes to spending money that you don't have. That's where the bank profits the most. They want you to be in debt and pay them interest while you struggle to build your own wealth. Being mindful of your spending habits and making informed decisions about managing your finances is key to financial well-being. To take control of your money and ensure that you benefit from its returns, you have to be mindful of your spending habits and make informed decisions. And the first decision you need to take is, number 1, stop allowing the bank to lend out all your funds. You should be the one earning a return on your money. However, it's important to understand when and how much money to keep in the bank. I personally have multiple bank accounts in my local bank, and they all serve different purposes. Like Warren Buffett said, owning an account with a local bank is the best as it leaves you with less worry. For my everyday spending and bill payments, I use a checking account linked to my credit cards, while for my emergency funds, I use a high-interest savings account. But that's not all, as I want my money to work for me, so I own another savings account with an automatic withdrawal set up to invest in stocks. The more you take your money out of the bank and put it to work, whether in stocks, real estate, or other avenues, the more that you're the one making the money instead of the bank. This is why banks are not thrilled about it, as they have less to lend out and fewer opportunities to profit from your funds. So make the move to get your extra cash out of the bank and watch your money work for you. I remember my interesting encounter with my bank manager when I decided to invest my money and buy some assets in real estate. She was visibly upset because the money was leaving their bank, which meant they had less to lend out to others. She even went as far as telling me that the market is bad right now and I can end up losing all my investment. But you know what? When you take the money out of the bank and invest it in assets that actually generate income, it's the bank that ends up losing out because they don't have that extra cash to lend anymore. Number 2, stop financing liabilities.
They're the businesses that you buy once, and then you don't have to keep making capital investments subsequently. So you do not face the problem of continuous reinvestment involving greater and greater dollars because of inflation.
The second thing you really need to do is stop financing liabilities. It's crazy how our culture normalizes financing everything, from designers to latest gadgets, through services like Sezzle and Zip. But the truth is, when you finance these things, you're just paying interest to own something that's losing value. And guess who benefits? Yep, your bank. For example, if you buy a brand new car, your car loses up to 20% of its value in its first year, not to consider the amount you've spent on maintenance and repair if you're someone like me. So why own debt to buy what makes you lose more money? These liabilities might make you look good, but they won't make you any money. They'll just keep you broke. So, you need to break free from this debt-heavy lifestyle and start focusing on building your wealth instead. The truth is, when you spend all your money trying to buy fancy things to look rich, it's your bank that's getting richer, not you. Instead, You should focus on using your money to invest in things that will actually pay you back, rather than just paying off debts to your bank. The biggest challenge in doing this isn't the disapproval from your banker, but rather the judgment you might face from friends who don't see you driving fancy cars or wearing designer clothes anymore because you're choosing to buy everything with cash. When to use the bank's money.
I do not think what is being purchased today and marketed today would work well. But if you can borrow money, if you can buy assets that will yield 7 or 8%, and you can borrow enough money at 4 or 5%, and you don't have any covenants to meet, you're going to have some bankruptcies, but you're going to also have better results in many cases.
There are situations where it does make sense to use the bank's money, like when buying boats through a mortgage, because most people don't have a large sum of money sitting in their bank accounts. But if you truly want to benefit from the bank's money, consider investing it in something that generates income, such as stocks or real estate. By borrowing money to buy a property that you can rent out to tenants, you can have them cover your expenses, including the mortgage, and even have some extra money left over for you each month. It becomes a passive investment where your tenants are essentially paying your bills. If you're using the bank's money to invest in assets that generate income, then it can be a smart move. However, if you're using the bank's money to buy things that keep you broke and make the bank richer, it doesn't make any sense. Your goal should be to build your own wealth, not enrich the bank.
No, I mean, I don't think having a bunch of bankers, all of whom are trying to get rich, leads to good things.
Lastly, it's important to remember that your bank and your banker are not financial advisors. Asking them for advice on how to spend your money or how much to borrow is like asking an insurance person how much insurance you should buy. Their job is to lend you money, so they may encourage you to borrow more than necessary.